Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 13th of March. I'm Daniel Lam, your host for the podcast. The non-farm payroll rose by 311,000 in February, which beat the estimates. Now, you would recall that earlier last week, Jay Powell testified in front of the House and the Senate, and his message was hawkish because he suggested that recent data favored the potential 50 bips rate hike later this month. But after this NFP report, the DXY index actually briefly tested a key support level at 104.13 before powering back some of its losses on the Friday session. So why was the dollar weak? Well, it was because the unemployment rate ticked higher in February. Now, Powell argued that a higher unemployment rate is needed in the fight against inflation. Also, he hinted that any data that was to be released until the March decision will matter for the Fed. The unemployment rate was one piece of data to watch. This slashed the probability of a 50 bips rate hike and may yet tip the balance towards a 25 bips rate hike in March. Hence, the US CPI inflation this Tuesday, as well as the PPI figure this Wednesday, will be heavily watched over. Now, besides the US dollar, there were some real sharp moves in other asset classes. So for example, the US 10-year yield fell sharply to the 3.7% level. Now we have repeatedly expressed our view to rotate into high-quality bonds and to extend average maturities in one's portfolio. And that continues to be our stance from this current podcast. Besides the uncertainties caused by the tug of war between growth figures and the Fed policies, issues caused by a Californian financial institution had led to flight away from equities into bonds. S&P 500, for example, broke below the 3,900 support level and may test the next support at 3,764. Moreover, recall from a podcast last Thursday that there has been build-up of technical factors linked with the S&P 500 volatility index, i.e. the VIX index, and the associated volatility products. We spoke about how large moves in the index would force dealers to exacerbate volatility in their hedging operations. We could well be entering that phase, with VIX rising sharply from the low 20s to nearly 30 on Friday. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.